Bill Gates, the great mind who co-founded Microsoft, is undeniably intelligent, especially in the realm of investing. He formed a close bond with Warren Buffett in his younger years and modeled after his investment strategy of owning high-quality businesses at rational prices. As the stock market went through tough times over the past year, Gates capitalized on this situation by expanding his stock holdings. Despite having his personal stock purchases away from the public, he is required to disclose the stocks that he acquired through his Bill and Melinda Gates Foundation Trust. Throughout the entire year, he bought over 13 stocks, with only 5 of those holding a significant chunk of his portfolio. The other 8 only amount to 1% each. Hello and welcome to Eminent Investments. Today we'll dive into Bill Gates' top 5 stock picks that he's buying during the market downturn. Before we start, give us a like and subscribe to the channel. If you're done with that, then let's get right into it. Stock number 1, Microsoft, 26.3%. It's quite interesting that Bill Gates' biggest stock holding is his very own company, which he founded years ago. Until now, he has kept on investing in Microsoft by buying shares back. This is a big move for Gates, given his prior decision to sell Microsoft back in the 1990s tech bubble. Although Microsoft's value has increased by a whopping 239,000%, Gates remains bullish about his prospects of buying shares. We do want to clarify that the Chief Investment Officer of the Bill and Melinda Gates Trust, Michael Larson, most likely influences this investment strategy. However, it's Gates who gave him that role, and it's likely that they consult with each other about the plans that they have for the trust. Right now, Microsoft is the world's second largest company, and it has a valuation of $1.8 trillion. Although it had its own fair share of struggles this year, dropping from $336 to $240, it still gives out a 1.1% dividend yield and holds a significantly high price-to-earnings ratio of 25. Despite having a decrease in price, Microsoft's foundational indicators paint a different vision. Each year, their revenue and earnings have kept on increasing even through the pandemic. Regardless of whatever external conflict, Microsoft seems to thrive. This is probably why Gates has so much faith in it, strengthening his decision to invest in it. Although its stock price decreased, the fundamentals behind the company remain strong. Stock number 2, Canadian Railways, 14.2%. The second biggest holding in Buffett's portfolio is the Canadian National Railway. He owned this stock for quite some time, and interestingly, he keeps increasing his stakes in it. Many would say that investing in this stock is old-fashioned and traditional. However, it's been around for a long time, tracing back its history from 1919. Its business model remains solid, it's sustainable, and it carries goods all over North America, which we know is essential in supporting the economy. On top of that, it barely has any competition. It would be a challenge to go against this company, because you can't simply build 20,000 miles of track across 3 long coasts. That makes CN a good investment because you're assured with the fact that it won't go out of business anytime soon. As Buffett would say, CN has a wonderful moat. At the moment, the stock sells at $160.84 per share, with its PE ratio at 22, a little below Microsoft's. However, its dividend yield is at 1.7%, a little higher than Microsoft's. However, if you take a look into its revenue and earnings, it's not really as impressive as Microsoft's, as they're still growing in that aspect. Stock number 3, Berkshire Hathaway, 9.3%. Warren Buffett and Bill Gates' friendship has withstood the test of time. They first met in 1991 when they got acquainted with each other in a business meeting. In that conversation, they both concurred that they credit their success to focus. Gates created the world's second biggest business through the market cap, while Buffett holds the 6th one, Berkshire Hathaway. Gates not only respects Buffett as a good friend, but as a genius investor as well. This made their bond even stronger, so much so that Gates chose to invest in Berkshire Hathaway, Buffett's company. With 9.3% of his overall portfolio, this has become his 3rd largest buy of 2022. However, by 2023, it covered about 23.3%, making it his 2nd biggest buy. Berkshire Hathaway won the hearts of many investors, and it even makes it more trustworthy that it's being managed by Warren Buffett and Charlie Munger, 2 of the world's best investors. These 2 bought full acquisitions of companies as well as shares of companies throughout time. If you plan to buy Berkshire, you will also own bits of the businesses that the company bought. Gates made a good strategy of investing in Berkshire a long time ago, and even now, he's still accumulating shares. What's interesting about Berkshire is that it never dropped throughout the year. Last year, its value was over $299.79, but today, it stands at $308.80. This only shows the importance of investing in stocks with competent business models that can also withstand crashes. However, Berkshire doesn't give out dividends, as Warren Buffett doesn't agree with the idea. This is a notable company, presenting a market capitalization of $680 billion. Although the displayed price to earnings seems high, it's important to note that this is skewed because of an irregular net investment income that had to be written off this year. For precise analysis, a perceptive approach would be to consider the forward PE ratio of 21, which gives a more rational representation of their earnings. Stock number 4, Waste Management, 7.8%. Waste Management is one of the stocks that Gates is bullish on. It's not exactly an aesthetically pleasing business. In fact, it's quite icky as one would expect. However, without it, the country would fall into disarray. Waste Management is a North American company that serves around 21 million customers in Canada and the USA. It has over 346 transfer stations, 46 recycling plants, and 293 active landfill disposal facilities. It's a solid business and a useful one. We strongly believe that this won't fade out anytime soon, and it will stand strong even in the face of a recession, because everyone needs their waste managed. If we look at the numbers, we'll find that Waste Management is one of the few stocks that has remained resilient against market crashes. It remains at the same price that it was a year ago, with a PE ratio of 29.16. One could say that it's compellingly high for a small and slow growth company. It also has a price to free cash flow, which is 33, and it also pays a small dividend. Stock number 5, Deere & Co., 3%. This is the last company with a significant chink in Gates' portfolio. However, a little disclaimer. This is a pretty plain, stable, and easy to understand company. Deere & Co. produces practical outdoor equipment, such as tractors, lawn care equipment, forestry, construction equipment, agriculture, and more. This stock's price has increased over the past year, starting from $342.11 to $428.76. We don't really know how Gates discovered these well-performing stocks. His investments have sustained their value, besides Microsoft, a case that doesn't favor most investors. Whether it's mostly Larson's choices or Gates who's supervising the process, their strategies are all aligned to selecting conservative businesses. Stocks like Berkshire Hathaway, Microsoft, and Canadian National Railway are tested and well-established business models, which are all dedicated to customer satisfaction and enduring products. This is a very wise way of investing, and Gates will probably sleep well at night, confident with how his high-quality nature will perform. Well, that's about it for today's video. If you liked our content, do give us a like and subscribe to the channel. Once again, this is Eminent Investments. Thank you for watching, and we'll see you next time.